Good afternoon, thank you and welcome to the University of Sydney Business School and to today's lunchtime event, Subcritical Coal in Australia, Risks to Investors and Implications for Policymakers. My name is Christopher Wright and I'm a Professor of Organisational Studies and leader of the Balanced Enterprise Research Network here at the University of Sydney Business School. Before we begin the proceedings, I'd like to acknowledge and pay respect to the traditional owners of the land on which we meet, the Caldecott people of the Eora Nation. It's upon their ancestral lands that the University of Sydney is built. As we share our own knowledge, learning and research within this university, may we also pay respect to the knowledge embedded forever within the Aboriginal custodianship of country. Okay, so the Balanced Enterprise Research Network, which is hosting today's event, is one of several research networks in the business school. And our remit is essentially to explore how organisations can aspire to a more sustainable existence, balancing their economic needs with critical social and environmental priorities. And part of our role is to try and identify prominent issues in the general field of business and sustainability. So late last year, we were planning future events and it struck us that one of the most prominent issues in this space is Australia's exposure in fossil fuel energy in an increasingly carbon-constrained world. With the recent emergence of ideas such as global carbon budget and the potential for fossil fuels to become stranded assets, this seemed to be an issue in which Burn could play a role in surfacing discussion. So late last year, we approached our guest speaker, Ben Caldecott, with the idea of coming out to Australia and talking to us about some of these issues. And today's event is one of the speaking engagements Ben will be involved in. So let me now briefly introduce our guest speaker and also our discussant for today. Today's speaker is Ben Caldecott. He's Director of the Stranded Assets Program at the Smith School of Enterprise and Environment at the University of Oxford. In addition to this role, Ben is also an advisor of the Prince of Wales International Sustainability Unit and an academic visitor at the Bank of England. Ben specialises in environment, energy and sustainability issues, working at the intersection between finance, government, civil society and academia. Prior to joining the Smith School, he was Head of Policy at Investment Bank Climate Change Capital, where he ran the company's research centre and advised clients and funds on development of policy-driven markets. He's also worked at a range of other organisations, including the think tank Policy Exchange, Bloomberg New Energy Finance, and as a Deputy Director in the UK's Department of Energy and Climate Change. So Ben comes to our discussion today with a wealth of private and public sector experience underpinning his research. Following Ben's presentation, we've asked Tim Buckley to act as discussant. Tim's no doubt well known to many of you in the room. He has 25 years of financial markets experience, including 17 years with Citigroup, where he was Managing Director and Head of Australasian Equity. Tim's currently Director of Energy Finance Studies at the Institute for Energy Economics and Financial Analysis, IEEFA, and has been researching and writing on the global coal industry, structural decline and the implications for Australia. So again, also very relevant for our discussion today. After Tim's discussion, we'll have a short amount of time for Q&A, followed by lunch. So without further ado, it's my pleasure to welcome Ben Caldecott to provide today's presentation. Thank you, Ben.
Great. Well, thank you, Chris, for that very kind introduction. Oh, this doesn't work. Well, I'm going to run through. Well, first I'm going to talk about why subcritical coal. Why is it an issue? Why have we started doing research on this topic? And describe then the research project, the objectives of it, and where this particular paper focused on Australia, where it sits within that. And then I'm going to cover sort of the two main parts of our report that's coming out tomorrow. The first around investment risk. How does this relate to investors, to companies that own subcritical assets, that are investing in subcritical assets? And then also the public policy implications of that, particularly around compensation and a possible approach to a phased closure of subcritical coal assets in Australia. So why subcritical coal? Well, so just quickly, so coal provides 40% of the world's electricity, and the vast majority of that, 75%, is subcritical. The rest is supercritical and ultra supercritical. And the thing about subcritical coal-fired power stations is that they're much more polluting, less efficient than other forms of coal-fired generation. So based on some of our estimates, which are actually quite conservative, they generate about 75% more pollution, carbon pollution, than the average advanced ultra-supercritical, which is the most up-to-date form of coal-fired power station, and use 67% more water, although that rather depends on the cooling system used, but this is just an average figure across subcritical assets around the world. The IEA, the International Energy Agency, in 2013 did a report looking at how much subcritical coal would need to be closed by 2020 if we were to keep a 2-degree window open, which is of course the international target that we have. And they estimated that a quarter of all the world's subcritical power stations would need to be closed by 2020. That's around 290 gigawatts of capacity. For a bit of context, in terms of carbon emissions and climate change, that subcritical capacity currently on the system generated about 8.6 gigatons of CO2 in 2009. That number's probably gone up to 9 and above by now. Emissions globally are about 55 gigatons of CO2 each year. So it's a sizable chunk, and depending on it's probably about 60-70% of global greenhouse gas emissions. So a very sizable chunk of the problem that would need to be addressed. This chart just highlights how inefficient from a carbon intensity perspective subcritical power stations are. So on the left-hand side, for you anyway, you've got the first 3 bars are different types of subcritical. You've got the older subcritical power stations, which are much less efficient from a carbon perspective, and then obviously more advanced coal-fired power stations, as you go further right. Australian, as you'll see later, there's the laser, probably around there, so in between the new and the old in terms of carbon intensity. Now for a sort of a bit more of a global context, so there are, based on the data sets that we've merged and brought together, which I'll tell you more about shortly, there are 7,500 subcritical power stations globally, and you can see Australia's got 2.2% of those. However, the average carbon intensity, the mean carbon intensity for Australia's subcritical power stations is much worse than that found elsewhere in the world. The European Union has the most, however, a lot of those are actually micro power stations, 30 megawatts or under. A lot of them do CHP, and that's why the number is quite inflated for the EU. And China, India have been building a huge amount of subcritical power stations, and a lot of the new capacity additions have been from there, but particularly China. But both the US, the European Union, have pretty old fleets of subcritical power stations, similar age to that found in Australia. So, the research project. So, I mean, one of the things is that this is a very under-researched area. The only work to date, other than stuff we've published, really is focused on climate mitigation scenarios. So, the IEA primarily, looks at how what role closures of subcritical could play in meeting a 2-degree target. I mentioned that, and basically because they're the least efficient centralized form of power generation, they're closed quickly and in large numbers in these models. But that's one interesting observation. We wanted to expand our analysis of these assets. So this project has 2 phases. The first phase culminated with a report that came out 2 weeks ago, which looked at investment risk globally. And that project was conceived in early 2013. And the second phase, and the report will come out in early summer, and really looks at the public policy implications of subcritical coal. Now, the report tomorrow looks at both those things in an Australian context. So you've sort of got a preview of the second phase that will come out in early summer via this Australia-focused working paper. Now, in terms of disclosure and also just to express appreciation, University of Sydney Business School has obviously provided support for me to be here, and that's greatly appreciated. Thank you, Chris. And the main project was funded by HSBC and the Generation Foundation. And as I said before, the audiences, there are two audiences. The first is investors looking at the material financial risks associated with subcritical coal. What are they? How can you assess them? How can you compare companies with portfolios? And then the other is, okay, well, this is a big contributor to climate change, their local environmental impacts. What does that mean from a policy-making perspective? If you're inclined as a policymaker, as a government, to get away from this kind of power generation, how might you do it? What are the costs of doing that? What might be the best mechanisms to do that in a cost-effective way? So, in terms of our Australia-focused paper, and investment risk. So this is just a sort of high-level overview of the state of subcritical coal in Australia. So coal is used to generate 56% of electricity in Australia, and about 90% of this comes from subcritical power stations. And those subcritical power stations are responsible for around 24% of Australia's total CO2 emissions, so a major chunk of Australia's carbon footprint. We find that there are about 29.5 megawatts of subcritical and supercritical capacity, of which 26 megawatts is subcritical, and Australia doesn't have any capacity that is ultra supercritical. Some of that 26 megawatts is currently mothballed, partly due to prevailing market conditions, and about 1.5 megawatts is currently mothballed in Australia. And the average age of that mothballed capacity is 34 years. So a good chunk of the stuff that is being mothballed is that bit older. And the average age of all the plants is 30. So the fleet is getting on, and the average technical working life of these plants is about 40 years. So that capacity is split between 22 power stations, and those are owned by 19 companies. And I'll show you which companies shortly. 3 power stations are owned jointly between a number of companies. There was a piece of work that came out from the Australian Conservation Foundation, I think, a week ago, and they had the top 10 highest carbon emitters in Australia. We mapped on our work to theirs and found that 9 of their top 10 own subcritical assets. And we also found that there are 4 companies that own 11 power stations: AGL, Origin, Stanwell, and Delta. And those 11 power stations are responsible for more than half of Australia's total subcritical capacity. So there's quite a high level of concentration. And as I said, a lot of this stuff is quite old, inevitably the older these power stations are, all things being equal, the more inefficient they'll be, and also the more vulnerable they will be to becoming stranded. So in terms of the methodology and how we did this work in Australia, but also globally, I just wanted to talk you through that, and more of this is in the report, but at a high level. So we basically bashed together 3 different databases globally. The first is the most recent version of something called the Carbon Monitoring for Action database, which is largely based on Platts data. We also brought together new data from Coal Swarm that came out, again, a few weeks ago, end of February time, which has all the new power stations that have been commissioned from 2009 to 2015, coal-fired power stations. And then we also used data from a project called Enipedia, which is a big data project which has plant level ownership data, and other bits of data that aren't in Karma or Coal Swarm. So that created a global database of all the world's coal-fired power stations and has info on their carbon intensity, their ownership, their capacity, their location, and so on. Now, one of the things we've done globally, because subcritical power stations are the least efficient, it's quite easy to figure out which power stations are subcritical and which are not. We applied the IEA's threshold for definition of subcritical, which is 880 kilograms per megawatt hour, to determine which power stations were subcritical. For Australia, because, and for a couple of other jurisdictions, we've actually gone through all the power stations and done additional internet research just to verify that everything's up to date. So as far as we're aware, for Australia, the data that we have on all the power stations is up to date as of 2 weeks ago. Now in terms of carbon emissions and geographical location, emissions data isn't reported from the companies, so we don't have the actual reported emissions data. The emissions data is calculated using statistical models that that are sometimes wrong, but are often quite accurate. The statistical models used to calculate emissions data from Karma is relatively conservative. So one of the things we've had back recently is, why don't you use this more up-to-date information, and that would actually increase the pollution levels that we're seeing. And then in terms of geographical location, some of the things are specifically geolocated. Other power stations have postcodes, others just regions. So some power stations you have very high degree of accuracy about where they are, others you don't. And the average spatial error is apparently 7 kilometers. Now the other thing we did is, taking that data and that database about where the power stations are, we overlaid 2 additional things. The first is air quality, measured by PM 2.5 levels, and the other is water stress, measured by baseline water stress. So we took a 2014 study from Boys and Martin et al., which has satellite data for all globally between 2010 and 2012 for PM 2.5, and then we can see whether subcritical power stations are in areas with high levels of PM 2.5, which of the 2 measures of particulate matter, 2.5 and 10, is the one that's the most dangerous. It's the one that can kind of seep into the bloodstream and causes the most health impact. So that's why we focused on that. And then with regards to water stress, we use data from the World Resources Institute and something called Aqueduct, which is an open source data set looking at water stress and other dimensions of water use globally. And again, looked at, overlaid that spatial data in our database about the power stations with information about water catchments that these power stations were located in. And looked at the percentage, the number of subcritical power stations in areas with extremely high water stress, which is defined by WRI as 80% or greater withdrawal to available flow ratios. So you probably can't see very much there, but this is a map of Australia with the WRI aqueduct water catchment information overlaid with the location of the power stations. Now, why is water interesting in an Australian context, but also a global context? Is that these power stations use an awful lot of water. A lot of the subcritical power stations globally use once-through cooling systems. They use an awful lot of water, and there's an opportunity cost associated with using that water. There could be agriculture or other industries that need that water. There are efforts in Australia and globally to price water. There's the question of physical climate change and the actual availability of water. So you've had power stations in places like India that have had to shut down for 6 months of the year because there isn't enough water for cooling. And so, all things being equal, being in a higher water stress catchment area is probably going to mean that you might face some sort of regulatory risk or physical shortage of water that might affect your operations and affect the prices you have to pay for that resource. So that's why we wanted to look at water. And you'll see which power stations are in high water stress areas in a second in a bit more detail. And then with air pollution, this is much less of an issue for Australia than it is for places like China and India, obviously. And so we didn't find any subcritical power stations which were in areas that broke Australia's very strict air pollution regulations, or indeed the WHO recommended levels. You can see from the satellite data that there is quite a bit of air pollution in the middle of Australia. That's because of the desert and particles from sand and stuff, and you get that in the Arabian Peninsula and the Taklamakan Desert in China. That's just because it's satellite data, so we're not too interested in that. In terms of our methodology, because we're only looking at PM 2.5 and we're looking at an area 100-kilometre radius around each of these power stations, if you reduce the size of the radius, if you looked at other forms of emission, NOx, SOx, mercury, and so on, you might get quite different results. We don't have the information to do that, but you could do more detailed work looking at different types of emission associated with different power stations. Now, again, this is less interest for the Australian case, but in terms of our global work, just because a power station is in a highly polluted area in terms of air pollution, it doesn't mean that it's directly the result of that power station. There could be very good scrubbers installed and so on. So we aren't making that causality point. The point is that if a power station is in a location with bad quality air, suffers from air pollution, all things being equal, there are probably going to be efforts to try and deal with that air pollution. And if you're an inefficient power station and you don't have appropriate scrubbers and so on, then again, policymakers and decision makers might put pressure on you to deal with that. And in terms of retrofits, if you don't have scrubbers and you're mandated to install retrofits, those are very expensive, capital-intensive measures that again might affect the value of your asset. So that's why we looked at air pollution in this way. And then here is one of the many tables in the paper that's coming out tomorrow. But this just sort of summarizes most of the key points, which is the 19 different owners of power stations here and their total capacity, the number of boilers, the average boiler age, carbon intensity, the PM 2.5 score, and then the baseline water stress in that area. And as I said before, air pollution from this measure doesn't seem to be an issue. The standard in Australia is 8 micrograms per cubic metre. None of those breach 3. But I think the thing that is important is the baseline water stress numbers, and there are lots that have a high score. And you can also see that quite a few of these power stations are quite old, as I said before. So the average boiler age is quite high in many cases. And you also have quite a few relatively small power stations with smaller capacities, and that's why you've got this concentration at the top. So what does this mean from an investment perspective? I think one of the things that our work shows globally and in the Australian case is that there is a strong case for financial institutions, for investors to look at this information, to use other information that might be available to evaluate the risk of subcritical assets, and where appropriate to screen them, to engage with the companies involved, or given the current debates around fossil fuel divestment, to consider divestment if that's a strategy that they want to employ. And I think from the work we've done, bringing together these different data sets and doing this analysis, I think there are a number of things that investors could do to encourage companies to do more. I think the first thing is it would be great for there to be more disclosure on emissions and different characteristics of power stations that could be used to improve this analysis. relatedly, there could be some sort of self-assessment of the proportion of portfolios at risk. In terms of capex pipelines and stuff that's going to be built, disclosing what proportion is subcritical and how you plan to deal with carbon intensity and other environmental impacts. Now, in terms of capex pipelines and new build, that's not relevant here because I don't think there probably aren't going to be any new subcritical power stations built in Australia, but in places like China and India and elsewhere, that's quite relevant. And then in terms of research extensions for this work, I think I've alluded to a few already, but improving the data quality, it's always going to be something we need to work on, but also introducing new data sets around which power stations have installed abatement technologies, what are the cooling methods used. All of that stuff would allow us to do a much more fine-grained analysis. And for some places like China, new data sets are becoming available, particularly around cooling methods, so we might do a bit more analysis looking at that. I talked about air pollution, and just to emphasize, I think it's important that we look at other pollutants other than 2.5 or PM 2.5, and again, finding the data to do that. And then another issue that I think is quite interesting is proximity to mines and dependency with coal delivery infrastructure. So a lot of subcritical power stations use lignite, brown coal, and those mines are likely to be close to those power stations. So it's important to look at and be owned by the same people. So it's important to look at the power station, but also the co-located mines. But it's hard to get data on that, and that's a possible research extension. So that's sort of part one of the paper, and there's more in the document, which will come out tomorrow. So to the second part, which is about public policy. So I think we've made one assertion in this document, which is that policymakers might be interested in inducing early closure of subcritical power stations because of climate change, because of local environmental impacts. I think that's quite a reasonable assumption to make, and certainly in a number of jurisdictions that's happening. So one of the things we did was to conservatively model the maximum cost it required to compensate owners of those assets in order to prematurely retire them. So I guess the other assumption we make is that in some contexts you might want to compensate owners of these assets to close them down. That might be politically necessary. There might be legal precedents depending on the jurisdiction to do that. So let's figure out what the maximum total cost is for compensation, and come up with the highest number, just to see what range it's in, and then we can work back from that and think about mechanisms that might reduce that number. So we've done that for Australia's subcritical fleet. These compensation costs, they're just about compensation. They don't include decommissioning costs. They don't include costs associated with replacing closed capacity, or so remediation, things like that, or steps needed to improve or replace that capacity, or replace it with energy efficiency measures. Now, depending on the energy market, those costs might be quite high. In others, they might be quite low. In the Australian context, they're probably at the lower end of the spectrum, just because of where demand is in this market and where it's heading. So to emphasize, the numbers that we've come up with are likely to be a significant overestimation of total compensation that would be required to induce closure. And we've created these compensation scenarios based on these assets being closed over 5, 10, and 15 years. So for the first scenario, over 5 years, starting in 2016, ending in 2020, assuming 20% of those are, closed each year, a linear rate of closure, starting with the oldest, finishing with the newest. These are the total costs. So 18.3 billion Australian dollars over 5 years, 13.7 over 10, 8.4 over 15. The reason it gets lower over more time is that your fewer plants are operational at the tail end of that period, so aren't eligible for compensation because they've closed down, they've retired because they've reached the end of their working life. So I guess is compensation a cost-effective thing to do? How could we make it more cost-effective? These are sort of some of the questions. Now, as I said, I think the real cost would be significantly lower if such a scheme was ever introduced in Australia or elsewhere. We've assumed that government would offer compensation for all future profits, and I don't think that would happen. Precedents so far in Australia don't give any indication that the government is obliged to do that for a start. The other thing is that generators would probably accept much less for a bunch of different reasons, not least the fact that these assets might face material investment risks. But you could also create processes like reverse auctions to make sure that the costs required were as low as possible, and that you could reduce, you could manage a tendency to inflate costs. We've also assumed that compensation is offered to all subcritical power stations that exist today, including mothballed ones. I think a phased closure program would probably not do that. It would probably target a much smaller number of subcritical power stations, and you'd want to complement that with regulatory policies as well. And the other thing is that we assume that this would start magically in next year, but that probably wouldn't happen. And a lot of these power stations would be shoved off the market anyway because of deteriorating market conditions. So, as I say, these numbers, discount them heavily in terms of the total amount. It's a thought experiment to show what the maximum total amount might be. I mentioned reversed auctions. So these could be one way of ensuring that retirements happen cost effectively if you did believe that it was a good idea to offer compensation to some owners of subcritical assets. So owners would bid to receive a fixed price for each unit of generation capacity they retired. The lowest bids in those auctions would win. Reverse auctions are used for all sorts of things, and in terms of fishing licenses and getting back water abstraction licenses, all that sort of stuff, so that we know how they work and what the parameters would be to run an effective one. Now, I suppose you all know better than me that there have been efforts to try and pay owners of power stations to close their assets in Australia, and the contract for closure scheme was not a great success, and we talk a bit about that in the paper. But I think there are a couple of things that could be done to radically change the outcome of a compensation-based mechanism. I've mentioned reversed auctions. I think they should be operated in tandem with the introduction of new emissions regulations. So I think there's a discussion here about non-CO2 emissions regulations that could be introduced. They should be introduced, but introducing them would be a kind of a stick. It would encourage owners to think about accepting compensation at a lower level. I think another thing to add would be a timeline for retirement, and possibly the use of an emissions performance standard. So that might be used to close down the oldest, least efficient power stations first, and then a compensation scheme is used to close the newer power stations that might be on the system for 15 years or so. That might be a good way of ensuring cost effectiveness. And then you could introduce incentives as well to try and get, if you wanted to try and get power stations to accept compensation early on and not just wait, and to prevent them all waiting and getting a better price. And you could do that with some sort of digression, or reduce the kitty for each for the early as the auctions proceed. Now I think it's inevitable, and I think we'll probably hear more about this, or I certainly will, over the next 24 hours, but this is a politically controversial set of issues, so political contestation is inevitable. But I think if policymakers can create a relatively robust framework for dealing with the tendency to want more and more compensation from ratepayers and taxpayers, then these demands can be contained. And there are lots of examples of these processes working, even though it didn't quite work the last time you tried it. So to round up, so I think the other thing to bear in mind internationally and from a public policy perspective is that you've got advanced economies like Australia, like Germany, like the US, that have really quite old and inefficient subcritical power stations. The average age here, I said, was 30 years. So you've got that on the one hand. On the other hand, you've got China and India and South Africa and Indonesia with brand new subcritical power stations. The average age is much, much lower. And they have much more capacity, and they're the big driver of emissions in these countries, and are likely to be for many years to come. And so, our climate future really does depend on the Chinas and the Indias of the world prematurely shutting down these power stations, because if they run for 40 years, we are truly screwed. And I don't think we can expect the Chinese or the Indians or anyone else in the emerging world, developing world, to close down these assets prematurely if we run ours right up to the end of their technical life or even beyond. So we do need to move first. And so I think, if you're going to do you're going to do this internationally, you would want countries with the oldest, least efficient power stations, like in Australia, to close theirs down in 5-10 years. And then you would want the Chinese and Indians to start doing that in a big way later on. Although actually, we are seeing some progress already in China with regards to the least efficient power stations. And then just a quick, in the UK it's quite interesting. So we had about a month ago a cross-party agreement with the three main parties, so Labour, the Conservatives and the Liberal Democrats. The three leaders signed a letter saying that they were going to phase out all of the UK's unabated coal-fired power stations. And all of the UK's power stations are subcritical. We've got about 19 gigawatts of capacity. They didn't include a date, but for the first industrialized economy that had the first coal-fired power station to basically say, we're going to close these down and phase them out, I think is significant. And I think they did that. Well, they did do it partly because of this question around, we've got to act first, otherwise others won't follow. And might Australians consider similar commitments in the future? Who knows? I hope so. But at that, I will leave it there.
I think this is a really important area for increased debate in Australia. At the moment, the debate's going nowhere, so hopefully this report and further focus on the issue will get the issue accelerated and actually moving forward in the near term. To that point, I might mention and take the opportunity, IEEFA is actually thinks this is a really important area. We have actually just hired Tim King, who's the ex-managing director, head of equity research at Deutsche Bank, and he's joining me here in Sydney to take on an extension of this work that Ben's team's already done. So Tim's actually just started last week, and we'll be accelerating the discussion and trying to lead it in the Australian context. So with that, I thought I might just raise a couple of points around it. Firstly, I'll give a little bit of global context to the work you've probably heard me doing, which is, to me, there is an absolute structural shift occurring. I think it's most evident in the seaborne thermal coal markets, and it's most actually evident in China. But to my way of thinking, I think we're going to hear a huge amount more about India in the next 12, 18 months, because I think India is looking to replicate what China is doing, and they're going to do it at a far faster rate, given the advances in technology that we've seen in the last 5 years. So I think Australia is clearly at risk of, well, we're not at risk, we are totally lagging on this subject, and I think we're at risk of being isolated if we don't make significant policy progress. So to Ben's point about water scarcity, I think that will be one of the key drivers in both India and China, as Ben has mentioned. And I think we actually saw the first step in China of huge magnitude, acknowledging that point a couple of months ago, when China actually re-evaluated its entire coal to liquids, coal to gas program. They were looking at a $50 billion program, massive investment in trying to utilise their interior coal assets. They're now actually re-evaluating that because of water security issues, water scarcity issues, sorry. But maybe just to give you one or two data points on the comment about seaborne coal being under structural decline, it's worth bearing in mind, if you're not aware of these three stats about China, in 2014, the GDP growth, 7.4%, electricity growth, 3.8%, thermal coal-fired power generation electricity production in 2013, negative. Coal consumption in China 2014, down 2.9%. So GDP growth 7.4, electricity growth positive 3.8, coal consumption down 3.9%. Last year was a massive turning point. You might think it might be a data point in isolation. 2015 will be back to trend. Think again. Shenhua reported on the weekend, Shenhua being the biggest coal mining company in the world, their budget for 2015 for total sales in China, down 10% in volume terms. So what was the first time this century that China saw that sort of magnitude of change? In 2014, Shenhua is flagging to the entire market. Think again, 2015, we'll actually see it accelerate. And in fact, Shenhua's coal sales in 2015, just to hammer that point home, for the first 2 months of the year were down 31%, 32%. That's pretty extreme numbers for a company that's the biggest coal producer in the world. And to me, India is looking to replicate that. India's energy minister came out and said he hopes to cease importing thermal coal within 2 to 3 years. I don't think he made that comment in isolation without actually thinking about what the ramifications are. So that's, to me, the global context. So I think Ben's report is absolutely critical to realise Australia is lagging. We need to actually have a lot more policy discussion in this area. The other reason why, in the Australian context, this report is really important is that the Australian electricity market is actually, in one respect, leading the world. For the last, just to give you a couple of data points about Australia, real GDP growth, 2009 to 2013, averaged 2.5% per annum for Australia. Electricity consumption declined by 1% per annum. So we've had a 3.5% reduction in electricity intensity of GDP for 4 years in a row. 2014, same trend. 2015, I think we'll see exactly the same trend. Origin actually has that as their base forecast out to 2018 in one of Grant King's latest slides. So to my way of thinking, electricity demand in Australia is declining, and that is putting pressure on the existing generating capacity. The other factor that's actually going to drive this trend, whether the power producers like it or not, is the entire issue of renewable energy being the low-cost supply. So once built, renewable energy has virtually a zero marginal cost of production. So obviously an emphasis on once built. You build renewable energy and you have a declining energy market, by definition, unless you actually have regulations that force you to use coal-fired power plants, then you're going to see renewables as the merit order effects, as you're going to take renewables first. They're the low marginal cost of supply. So that means that will actually accelerate the whole process of adjustment in Australia, irrespective of what the government does. And to my way of thinking, that's why the current federal government is fighting the RET so aggressively, because the last thing they want to do is add more renewables, knowing the renewables will actually make the coal-fired power plants obsolete. So in other words, the market is there to actually make it obsolete, and the government's actually trying to stop that happening. And that's why I think the RET discussion is so divisive and so important. I would actually respectfully challenge Ben's comment about the magnitude of compensation, and I think that might be a point for discussion. But to my way of thinking, I'm looking at the US market as an example of what the alternative, as opposed to paying plants to actually exit the market in an orderly way. You do need an orderly exit, to my way of thinking, the EPA under Obama has been extremely effective in actually regulating the closure of coal-fired power plants. We will see that this year. There's something like 15 gigawatts of coal-fired power plants exiting 2015 the American market. Now, okay, they've got their head with the tailwind of the gas revolution coming through, so that is unique to the US market, but it is the EPA who's saying that irrespective of what gas is doing, we are going to tighten the regulatory requirements for coal-fired power plants, and we're just going to keep tightening them. So the wave after wave of regulations means that all of the coal-fired utilities have to sit there and say, is it worth retrofitting a plant, spending $1 billion retrofitting, knowing that the regulations are just going to get tighter and tighter anyway? And so you've had upwards of 70, 80 gigawatts of coal-fired power plants in America slated for retirement over the next 5 years. Now, that's not done with any compensation. Obviously, the coal industry is screaming, the utilities are screaming about that, but I think the EPA has done it in a very well-orchestrated way, and it's actually really hard for that to be challenged in court. So no compensation actually has to be a given. I might also mention, to me, the process can start in Australia relatively painfully, and maybe we should just use the Liddell Power Station as an example. So it's a 2 gigawatt power station privatised 2 years ago, or last year by the New South Wales government. AGL acquired, and I use that word in inverted commas, acquired it for zero compensation. So they acquired the right to operate the plant. Effectively, they are taking on the remediation costs of closing the plant when the contract to supply electricity expires 2017. So again, no compensation is required. They should just be actually forced out of the market. The plant is 42 years of age, 44 years of age, and with suitable emissions controls regulation, then the logical aspect of that is that it just exits the market as a non-competitive source of generation capacity. So maybe just to conclude, I think this paper is really important in order to kickstart the debate or restart the debate that was going on 2 or 3 years ago and has just gone silent, that we do need a very orderly, phased closure decommissioning program across Australia. It can't all be Victoria's problem. It's got to be a phased closeout across Australia. It's got to be planned, and therefore the government does have to be involved. But I do think, to my way of thinking, the requirement is it comes at least cost to Australian taxpayers. It's not like any coal-fired power generator in Australia hasn't been watching what's happened in Europe for the last 15 years. They know it's happening, and therefore, to me, we really should heavily debate the call for any major subsidy on the way out. But maybe the final point I'll make is to one of the slides that Ben put up showing all of the power plants in Australia. The second from bottom was GE's plant in WA, if I'm not mistaken, 114 or so megawatts of capacity, only commissioned 2 to 3 years ago. It is commissioned with a government capacity subsidy. So the point I'm making is if we're going to actually start moving in the right direction, the first thing we've actually got to do is stop going in the wrong bloody direction and commissioning more coal-fired capacity, and worse, subsidising it on the way through. So I might leave it there and we'll open to questions.
Well, I suppose the first thing I could say, Ben, is thanks so much for the work. I think it's immensely important globally, certainly very important in Australia. Climate policy in Australia over the last 4 to 5 years or so has been a complete toxic mess. Okay? So we won't talk too much about that. But one of the real problems that I see in Australia, putting aside the politics, the mess that has been, is that it's very difficult to really put one's finger on an intelligent national energy policy. In Canberra, you essentially have a department for coal that constantly revisits the question about energy policy through the endless white paper that's always in production that we all put submissions forward to, and then we essentially come up with a sort of muddled together view in terms of what the future energy needs are for the country and how different technologies might all feed into that. Apologies for rambling, I'm going to get to my question. The difficulty with the politics will be is that absolutely we need to be closing down these filthy things, but we in this room are all enjoying the amenity from one of those, probably 2 of those filthy things, not too far away from us here in New South Wales. I can feel, I can see that it's light and the temperature is okay. there will be a question about what does that do in terms of capacity and what are the alternatives. And if anybody, I'm not asking you the question, you'll be clear about how those alternatives can be brought to bear quickly to basically fill the gap. It's pretty hard to know where to have the conversation with public authority. So my question is, with the work that you've done globally, you know, we're looking at these bad things, but these bad things within a system. You take the bad things out, it's pretty important in terms of your public policy settings to make sure you've got other things that are going to fill the gap. So how do you, what's your perspective on that, given the global breadth of your work?
Well, just quickly, you know, Australia is in a good position in the sense that you've got overcapacity, right? So it's less of an acute problem. In the UK context, we're pressing up against our capacity margins, so accelerating a coal closure program does necessitate, you know, an acceleration of a capacity and energy efficiency and interconnection program. And interconnection is obviously an issue in the European context more so than it is here. And in countries that are developing rapidly, India, China, for example, if you do accelerate coal closures, then you do have this, you know, they need more power, not less. So it is a challenge. But I think, you know, the points that Tim was making around the fact that the cat's already out the bag, this stuff, the deployment rates are actually much higher than we've all been predicting. Whether you're a financial analyst or a utility or a policymaker, the ability of decentralized renewables to scale up has been incredibly impressive. And so, you know, those measures combined with storage, I think will continue to surprise people. And so in a way, you know, the solution will become much clearer in the next few years, I think, in places where there are still many doubters, and obviously there are many here, not here, but, you know, in Australia. So that's sort of a rambling answer. But
yeah, maybe to follow on from Ben's point about distributed energy, I mean, we could talk utility grade, and we've got some of the best wind resources in the world, we've got some of the best solar resources in the world, so pretty stupid that we're not actually developing those resources. But the threat, I think, for the Australian government and the Australian incumbents is very, very clear in Ben's comment about distributed energy. So Australia has some of the highest retail prices of electricity, 28 cents a kilowatt hour we all pay on average, but we have 55 cents kilowatt hour peak capacity prices. So with those prices, solar with storage is totally commercially viable in Australia once the product is commercialised and built in scale. So I am watching extremely closely the Tesla factory. It is going to transform the world, and my warning to the Australian government and the New South Wales government is it will hit Australia first. Why? We have the best solar resources, we have the highest peak pricing for retailers. So irrespective of the fact we've got some of the lowest wholesale price of electricity, we, the consumer, pay peak retail prices, 55 cents, put a battery in your garage with a little inverter on it, solar on your roof, double your solar system, and overnight you reduce your electricity consumption by 90%. You don't go off grid, you just reduce consumption by 90%. So if the government sits there and stalls for a couple of years, then demand in Australia will actually accelerate on the downside, which will then force the closures, because ironically these coal-fired power plants will actually be loss-making. That will just force them to close for commercial reasons without compensation.
Okay, I'm conscious of the time, so we have 4 lined up. Greg, then over here, and then Blair.
Ben, thank you very much indeed for your talk, and look forward to your reading the whole of your paper tomorrow. I was very interested in the compensation line and the claim line, which I'm sure that Joe Hockey, our Treasurer, will be interested to add to the deficit line as he brings down his May budget, or not, perhaps. But I'm interested actually in some of the work that Tim's doing, because firstly, I'm very anti-compensation, and primarily because of the transaction dates by which many of these companies were bought and churned. A number have been churned a couple of times. And whether you take a date as Kyoto Protocol, or the ratification of it, or when it came into force within Australia, or when Kevin Rudd finally signed it, there's a date after which you can say the eyes were open for all private sector companies that purchased these assets, and therefore they bought the liabilities, a bit like you said before. So the question I have is, have you done any calculations yet with regard to literally asset by asset or company by company, what the liability, the future liability is were that carbon to be priced and then discounted back to the present. And then the remediation costs, insofar as they actually remediate both generating plant and sometimes coal mine, what those could be if they were brought onto the balance sheet today. And would that be a way to begin to start talking to the accounting profession with regard to the recognition of such liabilities?
I think it's a great question. I probably should actually just script it down and I'll give it to Tim King as his job description for 2015. It's exactly spot on. It's the remediation costs. And so when you ask AGL, okay, have you bought a stranded asset in Liddell? The answer is categorically no from them. They didn't pay anything, so how is it stranded? It's already written off. And that's a statement of fact. So all you're doing is you get 3 years of compensation, you close the plant, and the 3 years of profit that you make between now and 2015 goes to paying off the remediation costs that you've taken on board. That's how I would view it. But then what they're saying is we get to then just get some supernormal profits. In any month or year we get to operate after that point is just pure profit for us. So that's, to me, the debate that needs to be put in, and that's obviously where we're going to start the work. I think there is a huge need for remediation discussion and consideration, particularly on the coal mining side, because obviously the coal miners have very, very low remediation bonds under the various state legislations. In WA, they actually don't have any remediation bonds. They're exempt. The mines have been operating so long, they predate the legislation. So to my way of thinking, that then means if you look at the two WA coal mines, both of them are run by companies that are borderline corporate, well, sorry, rephrase it, they're 100% corporate distress candidates. They're borderline bankrupt, so therefore they're not going to have to fund those remediation liabilities. It just reverts to us, the taxpayer. So to my way of thinking, that's exactly where we'll start the work to look at it, to combat the push from the industry, which will say, give us compensation to exit early. We'll say, well, let's actually look at the NPV of the project.
Okay, question over here. Yep.
Thanks. Graham Sindon from Ernst & Young, Senior Visiting Researcher at Oxford. Ben, two things, coming back to this issue of compensation, two questions around that. The numbers that some things that's awkward with me about compensating someone for not doing a seismic ban. And then I look at the numbers that you're putting up there. I think, okay, 18 billion will buy me 9 gigawatts of solar PV. So what's the advantage of compensating the owners of the current assets for the government to do that, rather than the government subsidising the development of something that produces societal good and allowing natural market competition to push them out of the market? So what's the comparative advantage of this compensation approach versus a subsidy for good?
You eliminate 24% of Australia's carbon emissions. So your 9 gigawatts of solar won't do that.
No, but I'm not saying the government needs to buy them. I'm saying the government just needs to subsidise to create an effective ROI that people would then invest in. So that's the first question. The second one actually comes along with what Tim was saying. So we've got EPSs driving change in the US. We had the 2005 Large Industrial Plant Directive in the EU, which took out the bottom section of the EU coal market. Why shouldn't we consider something like that for Australia as well?
So first thing is, partly answered your first question, but just to emphasise, I'm not saying that compensation at that level is an acceptable thing to be doing. It's a maximum, number using very conservative assumptions, assuming that you compensated for closure, making, again, all sorts of assumptions. No sane policymaker would sign off that deal. That was, I think, the point I made very clearly in my presentation. If I didn't, I don't want to underline it. But the point is, if you want to achieve deep emissions reductions, and you do think you've got to do that by a certain point of time, you do need to induce the closure of the most polluting coal-fired power stations. And yes, decentralised renewables are bloody important, but in terms of carbon emissions, you're going to get much more bang for your buck inducing the closure of really inefficient coal-fired power stations than you are, using that money to subsidise solar. I mean, really, in terms of carbon emissions, it's a no-brainer. In terms of your second question, yes, I completely agree. And so there is this question of how you. You can introduce regulation to introduce all sorts of emissions performance standards. Of course you can. And doing so, if you did want to introduce compensation, if you felt it was particularly necessary, that, those measures could take out a lot of the plants that needed to be shut down, and you would concentrate a smaller bucket of money on closing down the plants that might not be affected by that emissions performance standard. But I guess the question is, for you, as people that live in Australia and participate in this political process, what's the political will to do any of these things, right? So I'm just going, you might want to pay compensation. That possibly might make it a bit easier in a political context to achieve the outcome you want, which is presumably less pollution. But you might think it's okay to just legislate and do an EPS. It'd be great if you could. I mean, that would be my preference too. But I'm not sure. It's about context.
Okay, Blair.
Just a quick one. On the eve of the New South Wales election and the debate about privatisation, the absurdity of saying we should sell it all off and make whatever money we can for the state, with in mind that later we'll all be paying that back, either through compensation or remediation. And that doesn't enter the debate or the discussion or the public understanding of this, where we're going on these issues. So just to both of you, the question about how you get a discussion and debate that can be publicly understood, then the need for a national energy policy that takes all these costings into account and gives us a plan forward that can be the most cost effective and hit taxpayers in the least possible painful way, I guess.
Shall I start? I mean, maybe just pick up on the point about subsidised solar. I mean, let's recognise that we've spent maybe $100 billion building the Australian national grid to subsidise fossil fuel deployment, large-scale base load, supposedly fossil fuel generating capacity. Now, solar is 100% competitive against our peak electricity retail tariff. The retail tariff includes all of the subsidy that's gone into building out the grid. So all the reference to subsidising solar, well, we're actually trying to address the massive subsidy that's gone into fossil fuels for the last 30 years. So to my way of thinking, it's actually trying to level the playing field. And that's something the Indian government's really latched onto, and they're trying to remove the fossil fuel subsidies. You might be aware they reduced the diesel subsidy into India 3 times. They reduced it 3 times in November and twice in December last year. So rather than giving the consumers a windfall on the lower oil price, they said, right, we're just removing the entire subsidy. Now, Malaysia did the same thing, Indonesia's doing it, Egypt's doing it, and so is India. Removing the subsidies is an absolute core part of that. So it's not the call for subsidies for solar. Solar is 100% competitive in the Australian context relative to retail, given we've already got this massive subsidised grid.
I would just say if there was ever a moment to join the dots in energy policy in this country, and indeed in other countries, it's probably now, in terms of overcapacity, renewables, transforming the market, climate change, transmission network, questions of privatisation. Somebody needs to be joining the dots. That's not to say that other countries do it particularly well, but sometimes there are moments where structural change is happening on a number of fronts, so you need to step back and reflect on that. So maybe Australia's in that position. The question would be, how do you do that? How political do you want it to be? Can you depoliticise it? What are the right entities and people to do it? So those practical questions, I suppose, come to my mind.